Hello friends, my name is Dr. Jyoti Prakash and I am Assistant Professor in the Department of Management, School of Management Sciences, Lucknow. Now welcome you all to the video lecture that is based on compensation management, and it is the second part in fact of compensation management. So just start the discussion and I will just link you people with the previous concept of compensation management. That is why I have mentioned all the definition or all the basic concepts, the meaning of compensation in this video too. So, compensation, as we have discussed earlier, that compensation is all about the money and the other benefits given by the employer or given by the organization in return of the contribution and the performance of the employee, or we can say that the compensation is all about the paying thing or the paying component of the organization to the people for the work that they are doing in the organization. And the another one we can say that in totality compensation may be in the form of cash or kind. So, compensation may be defined as the sum, and we can say that the monetary and non-monetary benefits given by the employer to the employee for in return of the efforts and the contribution, and also by doing so the organization is helping itself in achieving the goals and the objectives. So, it is all about the concept of compensation, and that we have discussed in the previous video. So, we have to understand now the important thing or the important element of compensation. So, the next thing come under compensation management is components of employee compensation. So, if we talk about compensation, the compensation includes the three elements, like the first one is fixed component, the second one is the variable component, and the other thing is what the benefits and the schemes that we can say that the benefits that the organization is giving to the employees. So, just have a discussion on the components one by one. So, the first component is like the fixed component, we can say that the base pay structure. So, salary and wages are the periodic assured payment made to the employees, and salaries basically are given to the permanent employees on the monthly basis, and if we talk about the wages are paid to temporarily or contractual basis on daily need, or we can say that it is temporarily given to the temporary employees of the organization. So, basically it is the fixed component, means if an employee is working in the organization, he or she will obviously give this particular component as a part of salary or as a part of remuneration, as a part of compensation by the organization. Means obviously this particular or this we can say that this assured sum will be given or must be given by the organization if any employee is working in the organization. So, that is why it is called the fixed component. The next component is variable component, or we can say that variable pay program, means these things or these components will be given and these components basically will vary from one person to another. That is why it is called variable pay. So, it includes the element or the components like bonus, commissions, incentives. The name itself refers like it varies from one individual to another, because if you being an employee, if you are performing well, if you are meeting out the expectation of the organization, if you are achieving your given goals or the targets, obviously if you then in case you are eligible to get these type of benefits. One of the benefit is profit sharing payment. Profit sharing is all about, like if the company after the completion of a financial year, if the company is company has gained out, or the company has basically gained a good ratio of profit and a good financial in a good financial condition. So, obviously that profit must be distributed to those one who are performing well, who have contributed a lot in doing so, in achieving in making the organization in that sustainable or in profitable situation. So, that profit will be distributed to those one in the form of basically cash. So, obviously that will not given to all the employees in the same manner, that is why this come under what variable pay structure, or we can say that these are the variable component introduces by the organization, because obviously the organization by introducing these type of variable components, the organization basically gives a feel of competition to each and every individual one, and gives a basically signal, or gives an instruction that if you want to get these variable benefit, so obviously you have to perform in a better way, or you have to perform as was said by the organization. These component come under variable component, and the third one is benefits. Apart from these two, means the fixed one and the variable component, there are other benefits associated with the performance, or associated with the well-being of the employees. So, these benefits could be one that are largely in fact mandated by the government, or in order to basically give a feel to the employees. So, sometimes employer also feel good in giving these type of benefits to the employees, and sometimes it is mandatory, and sometimes it is some of the benefits are maybe mandatory, and some of the benefits are not mandatory by the government or by certain acts. So, these benefits must be given by the employer in the form of compensation to the employees, so that they can give a feel to the employees that they are part and parcel, and they are taking care of our efforts and the performance and the contribution that they have given in the attainment of the profit, in attainment of the good financial conditions. So, these benefits must be given by the organization to the employees. So, we should, being an employer, we should understand the structure of the compensation. So, I have taken one pay slip structure of basically I can say that it is a salary slip, and as an employee, we should understand the component, the different component come under salary structure. So, I have mentioned, or I have taken a picture of a salary slip of a particular department. We can say that like you have to give there like your name, the designation, and the location where you are working, and these are the heads, like the salary heads and the deduction, earning and deduction. Your salary slip is basically expressed in terms of earning and deduction, means how much you are getting in terms of your the return of your efforts and the contribution, and how much amount the company is deducting from your salary in order to give you benefits either in present time or in future time. So, the employee, or being an employee, you should understand the different component come under your salary slip. So, just have a discussion one by one on the different component of your salary structure. So, the first one is your basic structure. Basic is all about the basic pay, like the fixed component that must be given in order to ensure that if any employee is working in the organization, that working or that efforts or performance must be given a minimum remuneration, so that they just give a they just feel that whatever the organization is whatever the employee is giving towards the roles and responsibility, in return he or she is getting. Means basic one is your fixed income, your fixed amount, and some assured amount that must be provided by the organization. So, the other head or the other component will be discussed one by one. So, the first one is Dearness Allowance. In short we can say that DA. So, Dearness Allowance can be understood as a component of salary, which is some fixed percentage of your basic salary, and DA has been included to compensate for price rise or inflation in a particular financial year, and in it basically it is revised twice in a year, means once in a January and the other one done is July. So, the current rate of Dearness Allowance announced by central government, that was earlier 17%, but now it has been increased to 28%. Means now the organization basically it is given by the private the government organization, but in private organization it is totally depend on the employer that they are how much percentage and how much this particular benefit will be given to the individual or the employees or not. But in in the government organization, the government employees are basically given this benefit by the government, and the percentage basically revised twice in a year, and the earlier it was 17%, but nowadays it has been increased from 17 to 28%. So, the next one is the next salary component is HRA. HRA stands for house rent allowances. HRA is known as house rent allowances, and it is that amount that is given by an employer to an employee as a part of the salary, and this allowance is given by the employer in order to meet out the cost of living in a rented accommodation. Means this particular component or this particular facility is not given to those one who are having their own home. Means this allowances will be given to those employees who are not having their own home and they are living in a rented accommodation. And if the employee are getting this much of benefit, they can also reduce and they can somehow lower down the tax burden or that they are being imposed by the organization. So, HRA allows the employee to get the tax benefit on what they are spending as rent during the year. So, we can also explain earlier, but just understand that at what condition one can claim, means how an employee can claim for HRA. So, the conditions like one is stay in a rental accommodation, obviously when rent exceeds 10% of the salary and when someone is getting HRA as a part of the salary. Mean if these conditions are prevailing, then you are eligible to get the tax benefit, and how much. So, after having a calculation we will understand how much we will get tax benefit as a part of HRA. So, the house rent allowances differ from one city to another, and how? Because HRA is 50% of the basic salary in metro cities. Like if a person is residing or if a person is living in a rented accommodation in metro cities, then HRA is 50% of the basic salary that individual will get. And if that individual is giving non-metro city, then he or she will get 40% of the basic salary as a part of HRA if he or she is giving in a rented accommodation. So, for HRA calculation and for reducing the tax burden, or we can say that for calculation for the tax deduction, the actual amount of HRA exempted will be the lowest of these three. Means how you can get an idea that how much amount you will get as a part of HRA and how much amount you will not give in the form of tax and how much amount you will give in the form of tax. Means how much amount of your salary will be taxable and not taxable. So, for that there are three things or there are three conditions there, like actual rent paid minus 10% of the basic salary. The second one is actual HRA offered by the employer, and the third one is 50% or 40% of the basic salary according to which city, means which city he or she is living. According to that, means in these available three situations, the lowest one and the lower amount, whatever the lower amount or the lowest amount, that amount will be basically come under that does not come under tax liability. In fact, that basically that individual can deduct that amount overall of the tax burden. So, for that we just have an example for having more understanding about the HRA concept. Like let us example that Radha is living in what, Delhi, and the rent is what, 10,000 rupees, and the pay slip of Radha is like basic salary is 30,000, HRA is 13,000, basic salary 10%, 10% of the basic salary. Conveyance allowance is 3000, and other means we can say that there are other heads, and total earning is what 54,250. As I said earlier that the salary slip is expressed in terms of earning and deduction, and the deduction like PF is 2000 and tax is 200. So, we have to just get the amount that will not come under the tax deduction part. For that we have to fulfill these 3 conditions. So, for that, like the amount received as a part of employer is what 13,000. So, the first condition is so, the first condition is like 13,000 first condition is 13,000 multiplied by 12, then it is 1,56,000. The actual HRA offered by the employer is what? We have seen that actual rent means the rent is what? Radha is residing in Delhi and he is paying 10,000 rent. So, the second condition is what? Actual rent paid less than 10% of the basic salary, means it is the second one, means actual HRA offered by the employer is what? 13,000, as we have seen in the salary slip, like the basic pay structure, basic pay is 30,000 and the second one is 13,000 HRA. So, the second condition in actual HRA offered by the employer is 13,000 multiplied by 12 means how much amount in a year, and the second one is 10,000 multiplied by 12 and actual rent paid minus 10% of the basic salary. 10% of the basic salary is how much? 3,000, because we are doing it on an annually basis. So, it is all about 84,000, and the third condition 50% of the basic salary, because Radha is living in metro city like Delhi. So, then in that condition, because if one person is living in a metro city, then 50% of the basic salary. So, basic salary is basically 30,000. So, 50% of the basic salary is like 1,80,000 annually. So, if we see the 3 conditions, like the first one is 1,56,000, the second one is 84,000 and the third one is 1,80,000. So, which one is the lower amount? The 84,000 means if Radha want to get an idea that how much amount will not come under tax liability. So, out of the total salary in an annual, 84,000 amount can be reduced or can be basically does not come under the tax liability. So, it is all about the concept of HRA. The next one is conveyance allowance. The conveyance allowance, the name itself refers that it is one of the allowances given to the employees if that employee is coming with his or her own vehicle, means it is not given to. In that case, means if the organization has given the transport facility to the employees for coming the organization, and if the employees if some of the employees have given or taking this particular advantage, so they are not giving this particular allowances by the organization, and if some of the employees are coming with his or her own vehicle, then in that case they are eligible to get these particular allowances by the organization. So, the exempted limit for all salary individual is set at rupees 1,600 per month in fact, and the amount that is offered as conveyance allowance can vary from one company to another, but the tax exemption limit is uniform for all 1,600 per month, means in order to in order to basically exempt from the tax liability, if in annually basis you can multiply 1600 plus multiplied by 12, and the amount you will get a relaxation in your overall tax burden. And companies providing as I told earlier, that those companies who are giving or who are providing transport facility to their employees, they cannot offer, or they do not offer basically conveyance allowances, and conveyance allowances can be grouped in under special allowances offered by the organization. The next one is medical allowances. The name itself refers that these type of benefits given to the employees for by taking care of their well-being or their health aspect. So, medical allowances is basically a fixed allowance that an employer pays to its employee as a part of their salary to meet their regular medical needs. And public sector employees compulsorily get this allowance as per the government policy, and in the private sector it solely depend upon the employer that they are giving or not. So, it is totally up to the perspective or the thought process of the employer, and in private case employer, the amount will also vary from one employer to another. Under the Income Tax Act, specific condition has been prescribed so that such expenditure is not considered as a prerequisite in the hand of employee, because employee should have spent the amount on medical treatment, and the amount should have spent on means income tax. Basically under Income Tax Act, one employee can claim the medical allowances under these conditions, like employee should have spent the amount on medical treatment obviously, and the amount should be spent on his or her family members treatment. The amount should be reimbursed by the employer, and the amount reimbursed by the employer does not exceed rupees 15,000 in a financial year. The next one is professional taxes. Unlike the name suggests, it is just not the tax levied only on professionals, it is a tax on all kind of professions like trade, employment, levied based on the income of such profession, trade and employment. It is levied on employees as a person carrying on business, including freelancers, professionals, subject to income exceeding the monetary threshold, means whatever the slab fixed by the income tax, if the income is exceeding that slab. So, obviously they are basically imposed these type of taxes on their salary, in fact on their income. Professional tax in India varied from state to state. The maximum amount of professional tax cannot exceed rupees 2,500 annually. The next benefit or the next component in a salary slip or the component of the structure, like the provident fund. Provident fund is a contribution fund, contributory fund with the contribution from both the employees and as well as their employers. Provident fund is focused towards post retirement income and benefits, and for EPF both the why it is called a contributory fund, because in that both the employer and the employer contribute an equal amount of sum in this fund, means 12% of the monthly salary given by the employer as well as 12% of the salary will also be given into that fund by the employer too. So, that is why it is called a contributory fund. Employee can contribute more than 12% of their salary, means if they want to save more money in if they want to get more money in future. So, obviously they can increase this a particular percentage in their as behalf of their contribution. But if we talk about employer contribution, then employer is not bound to match the extra contribution of the employer, means the employer will give only 12% of the contribution, 12% of the salary of the individual, but the individual is not bounded. The individual can voluntarily exceed the contribution of the salary, like he or she can contribute more than 12% of the basic salary. The next one is employee state insurance. So, ESIC is a contributory fund that enables Indian employees to participate in a self-finance healthcare insurance fund with contribution from both the employees and their employee. And this particular scheme is managed by Employee State Insurance Corporation, a government entity that is self-financing social security and labor welfare organization. This scheme protects employee interest in uncertain events such as temporarily or permanent physical disability, sickness, maternity, injury, employment, injury during employment, and many other more event in fact. And the scheme provides both cash and healthcare benefits. All employee of a covered unit whose monthly, means who are eligible to get this particular benefit by the organization, whose income does not exceed 21,000 per month, means those are eligible to get this benefit under this scheme. Those whose salary means more than 21,000 salaried people are not able to take this benefit under the act. This act only facilitate those one whose salary lie on this particular lies between in this particular amount. So, and this benefit can be given in order to basically take care of the health and the well-being of the individual one. So, the contribution includes both the employer and the employee, because under this both the employer and the employee contribute in this particular scheme or in this particular benefit too. So, the latest revision is with effect from 1/7/2019, and the rates are as follows, like employer contribution is 3.25 of the wages paid payable, and the employee contribution is 0.75% of the wages and wages payable. So, in totality we can, if we see that the 4% is overall, means the less amount is basically because the salary is not so high. So, employee is contributing, or the employee can contribute a less proportion of the salary towards this particular benefit for taking this particular benefit. The employer, but the employer is giving not, because the employer is not giving too much salary to these individual. So, they are basically, their contribution is more, and the contribution is like 3.25% of the wages. And like if we see, we can take the example like employee reduction is 0. If the salary is 15,000 rupees, suppose one individual is getting amount of or salary of 15,000 rupees. So, employer contribution will be 15,000 multiplied by 0.7% is like 112.50. And if we talk about employee contribution, how much percentage? Sorry, employee point of view, and if we talk about employer point of view, so 15,000 multiplied by 3.25% is, so how much? 487.50. So, total amount an individual is getting is what? 112.50 and 487.50. How much? 599. We can say that approx 600 rupees. Approx 600 rupees is getting an individual under this particular under this particular scheme, under this particular benefit in fact. So, that is all in this video lecture. I hope I would succeeded in make you understand the different component of your salary slip. So, whenever you get a salary slip from any organization, wherever you are going to join, so you just understand the different component of your salary, means how much benefit you are getting in return of the contribution and the efforts that you are giving in the organization for attainment of the goals and the objective. That is all. I hope you will like. Thank you, students.